Hey everyone, the cybersecurity has been an interesting industry to evaluate here in 2024. It's almost as if the benefits surpassing artificial intelligence or the benefits attributed to artificial intelligence are not quite working in the cybersecurity industry's favor. Perhaps some enterprises are allocating budgets that were formerly going to cybersecurity, now going to artificial intelligence. But that can only be temporary. That can only be temporary. The needs of cybersecurity are only increasing because of artificial intelligence. AI is helping threats become easier and more complex and more automated. And so you need to spend more on cybersecurity longer term, even if right now in the near term, you can pause or delay some spending. So, with that being said, I wanted to update my recommendation on Fortinet and answer if Fortinet stock is a buy at current valuations and why the stock price has been under pressure as of late. So, let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so in its latest quarter, Fortinet gave second quarter guidance that suggested billings would fall by 1.3% from the same quarter the prior year. And for the full year in 2024, Fortinet is forecasting only 1.6% growth in billings year over year. Now, billings eventually lead to revenue, and if billings are flat to up 1%, that suggests revenue growth is going to slow down considerably over the next few quarters, perhaps the next couple of years. In the latest quarter, Fortinet's revenue growth was still approaching double digits, and it's forecasting 8 to 9% revenue growth in the next quarter and for 2024 overall. But if billings growth continues at just 1% or negative 1%, eventually the revenue growth will decrease. Revenue growth will decelerate. So that could present headwinds for Fortinet stock investors longer term. And when I saw that guidance from Fortinet in its latest quarter, I downgraded Fortinet stock. Previously, I had Fortinet rated as one of my top 25 stocks to buy and one of my top 10 growth stocks to buy for 2024. I took it off those lists. I still have it recommended as a buy, and I last updated that on May 3rd, but I took it off my list of top stocks to buy, so I downgraded it from that higher ranking because of those industry headwinds. Now, longer term, the company has done excellent, right? 5.396 billion in revenue in the trailing 12-month period. That's up from a little less than 1 billion in 2015. So nearly 5x in revenue in the last 8, 9, 10 years or so. Now, revenue, I suspect, will continue growing over the next decade, but I think the rate of growth will slow down, at least especially for the next 1 to 3 years, as enterprises look to allocate more spending to artificial intelligence and the competitive dynamics in the industry are worsening. Palo Alto Networks, one of its main rivals, has recently introduced a strategy aimed at gaining market share by offering competitors or customers that are with their competitors a quasi-free trial to join Palo Alto Networks for as long as their contracts are with the rivals. And so that could kick off a wave of competition along with slowing growth, and those industry trends have not been working in Fortinet's favor. That could explain why the stock price is down, why billings growth are falling, and why the industry overall, the revenue growth rate is decelerating. Still, it's a very lucrative business model, 23.82% operating profit margin in the trailing 12 months, and this has been rising consistently since 2017. The company has invested in research and development to implement its products and services, and now it's reaping the benefits of those investments with little incremental investment needed compared to the revenue that's being generated. So long as Fortinet continues to grow revenue, even at mid-single digits, it should be positive for its operating profit margin longer term. Cash flow from operations to sales is also very solid at 38.7%, even though it's been relatively flat to declining, and that's due to the declining billings growth. And when you have billings, sometimes your customers pay up front, and that causes cash flow from operations to increase. But when you're not getting billings, you're not retrieving those cash flows from customers, and that could cause your cash flow from operations to decelerate before your revenue decelerates. Sometimes customers give Fortinet money up front, but Fortinet cannot recognize that as revenue until it delivers the service it has contracted for those cash flows. So cash comes in, but it's not counted yet as revenue until Fortinet serves whatever it is in the contract. And finally, these industry headwinds have already impacted Fortinet stock. Its valuation is just about as cheap as it's been going back several years. It's trading at a forward price to earnings of 30.43, which is relatively cheap for the kind of profit margin and cash flow from operations and the tailwind industry-wide longer term, right? The industry, cybersecurity industry spending will increase over the next decade and over the next 2 decades. So you're getting that tailwind. Near term, competition is increasing, which suggests a lower valuation is necessitated. And I agree with that lower valuation because of those increasing competitive dynamics. Still, at a forward price to earnings of 30, I see Fortinet stock as a reasonable risk versus return at current valuations. It's still not one of my favorite stocks. As I highlighted earlier, I took it off of my list of favorite stocks. I just placed it in my list of top stocks, not top stock, but just a stock to buy, but not one of my favorite stocks to buy. And I would reiterate that recommendation here. Fast forward after I've evaluated the results from Palo Alto Networks and I've evaluated the industry dynamics. It still looks like a buy to me at current valuations, but I'm still monitoring this industry closely. I'm looking at what's happening industry-wide, how competition is evolving in the near term, because this is the most volatile I've seen competition in the cybersecurity industry in the several years I've been following this industry. Typically, the growth in this industry was so strong that competitors or rivals didn't feel the need to fight with each other for market share because there was so much more revenue coming into the industry. They didn't need to go after their rivals' market share. They could just continue growing revenue just because the industry was growing. But now that the industry growth rate has slowed, some companies like Palo Alto Networks that have a desire to grow more rapidly are finding the need to go after market share, to go after the rivals' customers and to take customers away from competitors instead of just going after the new revenue that's coming into the industry. That's my main concern here. That's the biggest threat right now to me in the cybersecurity industry, because for me, risk, competition is a primary risk factor. I dislike competition and I try to stay away from industries that have fierce competition, because when two companies compete with each other and the competition gets fiercer, that's really bad news for investors. Because if Palo Alto Networks offers lower prices or more incentives or more promotions to steal customers, Fortinet is not just going to sit around. They're going to respond to that competitive threat with their own price cuts or their own incentives or something to fight back. And that race to the bottom hurts investors because that's bringing down profit margin. It helps the customers because they're all getting better deals, but it's not good for investors. And the primary case to look at here is the electric vehicle industry. The price competition in that industry with Tesla and everyone else has brought profit margins significantly down, lower than they already were for that industry. You see how bad that is for competitors. So I'm paying close attention, but I still think Fortinet is a buy at current valuations. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.